India first. Next trading day 1st December 2025. Nifty closed today at 26,202.95 and BankNifty ended the session near the mid-59,000s, derivative bias suggestive, precise BankNifty closed circa 59,700 to 60,100 region by intraday peaks and LTP band. What must be defended tomorrow? For Nifty, 26,150 is the critical defend or break line. If bulls hold that within the first 15 minutes, watch for momentum to drive a move toward 26,450 to 26,500. If 26,150 is broken decisively, anticipate a sharp move down toward 25,900 to 25,750, as sellers look for quick liquidity. BankNifty will be the volatility engine. Mark 59,700 to 60,000 as the bullish defend zone. A break below 59,000 in the morning could roll the bias bearish, with risk of swift selling pressure. Stay with me 20 more seconds, you'll want to write these zones down, they could dictate major direction tomorrow. In just a moment, BankNifty key zones, global context, and what flows say. Global market overview. As we wrap up domestic trade, global roads are quiet but fraught with potential. The US markets were closed for Thanksgiving. That means markets reopen next week with thin liquidity footprints today. That thin global liquidity creates risk for exaggerated moves, especially in Asian markets. Asia has already started trading under this shadow. Subdued flows and caution from global investors kept markets in check. Europe, likewise, lacked a definitive directional push today, mixed cues across sectors, no strong macro trigger, which leaves Asia and emerging markets isolated. For India, this matters. With weak global catalysts, tomorrow's move will likely be driven by domestic flows, FII/DII, sector-specific news and technical setups, not global risk appetite. In other words, domestic liquidity and sentiment will have outsized influence till global markets reawaken. Also factor in global commodity prices, crude oil dynamics, currency fluctuations, rupee versus dollar, and global interest rate cycle whispers. Any surprise in these can ripple through Indian markets quickly. So while global markets are quiet now, the latent volatility remains. Indian market overview, Nifty, BankNifty, fundamental plus technical lookback. Domestic market closed in a state of indecision, Nifty at 26,202.95, Sensex at 85,706.67. The index drifted, saw intraday swings, but ended flat, a sign markets are grappling with profit-taking versus underlying selective buying. Over past sessions Nifty had rallied, but today's flat close indicates that short-term supply is active near higher levels. There is repeated absorption around 26,100 to 26,250 area, meaning buyers are stepping in, but sellers are also ready to offload at higher offers. This tug-of-war leaves the market stuck in a narrow band, until a clear trigger emerges. On fundamentals, December quarter earnings anticipation, combined with domestic macro stability and cautious optimism on rates, continue to support selective appetite. However, global liquidity drying and weak global cues are keeping broad-based participation limited. Only certain sectors, auto, pharma, are seeing strength. For BankNifty, volatility remains elevated. Bank stocks are sensitive to interest rate expectations, credit growth outlook, and foreign institutional flows. Given the wide range yesterday and mixed market sentiment, BankNifty remains a key sector bellwether. Its move tomorrow could set tone for financials' heavy participation or avoidance. Sector performance today, top plus weakest, why behavior occurred. Sectoral action was narrow, selective, not broad-based. According to trading wrap-ups, auto, pharma and media outperformed, up till 0.51%, while power, oil and gas, telecom lagged, and sectors like insurance underperformed. Why? Auto got a boost from fresh analyst calls and investor optimism on domestic demand, possibly hinting at higher festive demand and favorable policy talk. Pharma strength may be stock-specific, defensive buying at lower valuations as some stocks in the pack saw renewed interest. Media also picked up, possibly on ad spend visibility and anticipation of macro stability. On the flip side, energy and oil and gas were under pressure, commodity price uncertainty and global crude volatility weigh on investor interest. Telecom and insurance, both sensitive to interest rate outlooks, regulatory anticipations, and foreign fund sentiment, saw muted or negative flows. Net result, a narrow rally, not a broad bull run. Sectors showing strength had stock-specific or micro-fundamental support. Weak sectors reflect cautious macro sentiment and demand risk. Top gainers and losers, news-based and technical reasoning. Among the top outperformers, Mahindra & Mahindra, M&M, and Sun Pharma. M&M got attention after bullish analyst notes, possibly hinting at demand optimism in rural auto cycle. Buying seems to have come on higher relative volume, which is technically supportive. Sun Pharma saw defensive buyer interest, likely investors looking at valuation plus pharma defensive angle. On the losing side, some heavyweights in insurance and energy lost ground, profit-taking after a rally, combined with weak commodity sector fundamentals. Sector-wide lag shows that money rotated away from cyclicals with uncertain demand outlook. Technically, winners showed a stronger volume price structure, volume confirming price rise, signaling institutional participation. Losers, despite some upward moves earlier, were met with selling into rallies and lower volume on bounces, signaling lack of conviction. This paints a picture: money circulates selectively, not universally. Traders are chasing only those names sectors that check both flow and technical boxes, rest remain sidelined. FII-DII activity, cash plus derivatives, impact on market psychology. Institutional flow data remains crucial. As a rule of thumb, when foreign flows, FIIs, are strong, big cap indices like Nifty BankNifty often rally. When domestic institutions, DIIs, step in during dips, they stabilize the market. Today's official FII-DII summary, provisional, shows mixed activity. FIIs were relatively cautious, with intermittent selling, while DIIs maintained modest buying interest. This tug-of-war likely contributed to the muted index move, with foreign selling capping upside, while domestic buying prevented a sharp drop. Outcome: range-bound close rather than directional breakout or breakdown. From a psychology standpoint, such flow dynamics breed hesitation among retail traders. Nobody wants to pick a direction aggressively until flow visibility clears. Thus, tomorrow's open and initial flows, FII plus DII, may matter more than any technical breakout attempt. Importantly, FIIs tend to move large volumes in highly liquid stocks and sectors. Their net moves often shape trend for the day. DIIs often provide support when FIIs withdraw, but their impact is more stabilizing than directional. Given today's mixed activity and global liquidity vacuum, tomorrow's market may hinge on which side swings, continued FII caution or renewed interest in financials' large caps. Technical analysis, daily plus hourly plus 15 minutes. Let's zoom into chart structure, multiple timeframes to understand probable tomorrow's path. Daily view, the trend remains broadly up. We've seen Nifty rise over recent weeks and even register a third straight week of gains in November, ending up tilde 2% for the month. But momentum is cooling. Price is consolidating near 26,100 to 26,300. Daily RSI and other oscillators are neutral, not overbought, not oversold, implying market is in a consolidation indecision phase, awaiting trigger. Hourly chart. Over the intraday, we saw a lower high structure post midday. Price failed to sustain upside and reversed. That indicates sellers are alert at higher offers. Demand is cautious. The consolidation also took place at a narrowing range, a classic prelude to a breakout or breakdown. 15-minute chart. Micro view immediate support lies near 26,100. This is where dip buyers stepped in earlier. If that breaks, next support zone is 25,900 to 25,850, last swing low. On the upside, resistance cluster sits at 26,420 to 26,500, price levels where sellers previously offloaded. Clearing those with volume may invite technical traders and short covering to push toward 26,650 to 26,700. Momentum signals. On daily scale, neutral. On hourly, slight bearish divergence. Price making marginal highs while RSI other momentum falling, a subtle warning sign. On 15 minutes, momentum is weak, price is coiling, volume thinning. Support resistance recap, educational. Support, 26,100, 25,900, 25,750, if 25,900 gives way. Resistance, 26,420, 26,500, 26,650, 26,800, if breakout gathers steam. High-risk rejection zone, below 25,900, failure here may trigger accelerated selling, as intraday stop losses cascade. The message, the market is coiled, until we get a trigger, flow, fresh news or external influence, price is likely to remain range-bound. Key levels, educational, never advisory. Tonight chart those zones. 26,150, key defend decision zone for bulls. 25,900, critical lower pivot, breaking this shifts bias to bearish. 26,500, breakout threshold, gives green light for upside moves. BankNifty 59,700 to 60,000, bullish defend range. BankNifty 59,000, bearish pivot, breach could lead to sharp downside. Write them clearly on your chart tonight, mark them as, if northeast arrow then bullish, if southeast arrow then caution. Market psychology, why traders behaved this way today. The flat close masks a deeper tug-of-war between caution and selective optimism. Traders were wary, global liquidity is thin, foreign flows uncertain, global cues muted. So many opted to sit on sidelines or rotate only into stock sectors with clear narratives, auto demand, pharma defensiveness. At the same time, domestic institutions, DIIs offered some support, enough to prevent a sell-off, but not enough to fuel a broad rally. That created a narrow leadership market. A few stocks rose, but broad participation was missing. In such a context, price oscillated in a tight band, reflecting uncertainty, not conviction. Volume price action suggested accumulation at support and selling at resistance, classic consolidation. Psychologically, many traders are adopting a wait-and-watch stance ahead of global reopen, macro data releases, and Q3 earnings announcements. Until clarity emerges, domestic liquidity and flows remain the main game. Important news and drivers: domestic plus global. Domestically, corporate earnings expectations, macro stability, and favorable demand outlook, especially in auto, consumer goods, provide long-term structural support. However, selective buying only, not broad confidence. Add to that cautious foreign investor stance, global uncertainty, and weak global liquidity, all of which dampen aggressive risk-taking. On the global front, US markets will resume next week after Thanksgiving, which could bring renewed volatility, global interest rate expectations, crude oil dynamics, currency movements, rupee versus dollar, and global risk-off sentiment are latent triggers. With Europe directionless today, and Asia trading under low volume, any external shock or global cue next week could quickly ripple back to India. Thus, until clear global cues return and institutional flows align, domestic volatility will dominate. Tomorrow's market outlook. Based on all of the above, here's how tomorrow could shape up, depending on flow, technical reaction, and global sentiment. Bullish scenario. Nifty defends 26,150 within first 15 minutes, and volume picks up. Domestic buying plus neutral global backdrop price moves up to 26,420 to 26,500. If momentum sustains and BankNifty holds 59,700 to 60,000, rally could extend toward 26,650 to 26,800. Sector rotation into financials plus auto plus pharma may drive uplift. Bearish scenario. Nifty fails to hold 26,150 early, weak global cues plus FII selling plus weak domestic flows, price slips to 25,900 and possibly 25,750 if selling intensifies. BankNifty break below 59,000 could trigger aggressive financial sell-off and pressure broad markets. Markets may drift or slump until fresh positive triggers arrive: macro data, global stability, rate cues. Neutral sideways scenario. If flows remain mixed and global liquidity remains thin, Nifty BankNifty could chop between 26,100 to 26,400 all day, volatility low, range trading dominant, narrow leadership persists. Traders may sit out except for stock-specific trades. Decision levels to mark: tonight 26,150, 25,900, 26,500, for Nifty, 59,700, 59,000 for BankNifty. Watchlist for tomorrow: 2 to 4 stocks, only educational technical logic. Based purely on technical setups, flow patterns and relative strength. Mahindra & Mahindra, M&M, showing relative strength among auto peers, breakout potential if Nifty breaks out, watch for intraday volume confirmation. Sun Pharma, defensive buying interest recently, if broader markets face pressure, pharma may act as safe haven, watch strong demand zones. Large private bank, BankNifty constituent. Given BankNifty's volatility, a bank stock with high liquidity may reflect broader sector flow, good candidate if financials rally. Selective mid-cap consumer-oriented stock. If global cues stay muted but domestic demand narrative strengthens, a consumer-oriented mid-cap with good volume could see moves, but treat as high risk, high reward. Remember, these are technical observations and educational reasoning only, not stock tips. Volume price confirmation, why it matters. A price move, up or down, gains strength when accompanied by robust volume. When price rises with low volume, especially in low liquidity global sessions, treat it as provisional. It's likely just a short-term bounce, not a sustainable breakout. On the flip side, a breakdown on high volume signals commitment from sellers and increases the probability of follow-through. Tomorrow, watch not just the price levels but volume spikes on moves beyond support resistance zones. Use them as confirmation before taking directional bias. Without volume, moves are weak. With volume, conviction builds. This simple concept can help you avoid false breakouts and whipsaw trades. Strong summary and CTA. To summarize, today's flat close belies a deeper market indecision. Nifty is coiled near 26,100 to 26,250. BankNifty remains the volatility engine, flows are mixed, global cues are sleeping. What happens tomorrow depends on which side flows or traders steps up first. Mark your charts, 26,150/25,900/26,500 for Nifty, 59,700/59,000 for BankNifty. Watch opening flows closely and pay attention to volume price confirmation if markets try to break out or break down. This is an educational analysis, not investment advice. Use discretion, manage risk, and always trade with clarity. Please like, subscribe to the channel Market Insights by Nersu and share this video.